Stock markets in Europe are trading a little higher this morning, with the UK's FTSE 100 index currently up around about 10 points. The DAX in Germany up around about 39 points, and the Euro Stoxx 50 index higher by just around about 8 points. US stock futures are trading a little bit higher as well. The Dow's up about 25 points, and the S&P 500 currently up around about 2.5 points. In the currency space, the US dollar is stronger but losing a bit of steam. And when it comes to commodities, gold's currently down around about 90 cents, and core government bonds are also trading a little weaker. Good morning, I'm Ishaq Siddiqi. It's Friday, the best day of the week, as we all know. It's the last full trading day of the week before the Christmas break and the New Year break. And I'm going to give you a quick idea of what's going on in your daily market bites. So, Fed made its call to taper on Wednesday, cutting $10 billion from their monthly bond buying program, which was previously at $85 billion per month, now down to $75 billion per month. So a small cut, but one that signals that the Fed is now on course to continue cutting during the course of 2014, and possibly by the end of 2014, QE as we know it will cease to exist. Now, when it actually comes to the market reaction, we did rally across the board for US, Asian and European markets yesterday, and that was on the back of general kind of comfortability with the idea that the Fed has kind of pulled the trigger, and it was the right thing to do, ending months of uncertainty of when the Fed is actually going to make the move. When it comes to assessing the implications of it, people do believe that we are in for a short-term weakness period, as the market has to absorb the shock of lower liquidity and the possibility that we are going to see liquidity cut out from the market a lot quicker than expected, with many people now thinking that the Fed could unwind their bond buying program completely by mid-2014 if growth in the US is on board. The Fed did sugarcoat their meeting by putting in a stronger forward guidance measure, which certainly suggests the Fed wants to reassure the market that although that they are tapering asset purchases, they continue to maintain a low interest rate policy going into 2016 and beyond. Now, when it comes to other news in around the world, the EU's credit rating has been downgraded to AA plus from AAA plus by S&P. The rating agency cited a general lack of commitment by EU leaders and the conscientious political environment, suggesting that EU leaders have been pretty slow off the mark to get their act together and do something about the Eurozone economy. And that's a day after a pretty underwhelming bank union measure that the EU leaders have agreed on. It fell short of expectations, it was highly convoluted, didn't really reassure the market that banks could be rescued, or a failing bank rather could be rescued in the Eurozone as quick as some expect it to be, and that is currently one of the issues in the market, that in 2014 we may see another flare-up of the Eurozone crisis, given the fact that the policymakers out there are really not quick on the response when it comes to emergencies, and have put more faith in the ECB to act rather than doing something themselves, and more importantly, it hasn't broken that nexus between banks and sovereign, which means that sovereigns are still pretty much on the front line when it comes to bank rescues, meaning that taxpayers are the ones to take the hit first. Other stuff going on today, of course, is the UK and US GDP figures for the third quarter. UK GDPs will be eyed very closely, given the fact that we've seen improving economic data out from the US during the course of 2013 and a continuation of that in 2014. In fact, S&P reaffirmed a AAA rating on the UK. In the US, of course, the GDP figures will be eyed very closely, and that's mostly because of the fact that we just had tapering. We want to see if data backs up the Fed's move. The Fed obviously believes that the US economy is on the path to growth. Now we need to see that from GDP data. If 3Q GDP is strong, it suggests that we are going to be in for a good 2014, and the Fed made the right call. Anyway, that is all for your daily market buy. Have a good weekend, and I will see you guys back on Monday. Cheers for watching.